you a small and medium-sized enterprises and looking to grow your business? Save cost while rising above the competition? Did you know that digitalizing procurement process enables smarter purchasing decisions? By spending less or demanding better value, improving your cash flow, boosting your profits, and giving your business the extra resources needed for future investments for expansion. Introducing Procure Here, your one-stop source to pay. E-procurement solution which enables you to realize cost savings via a fully trackable purchasing process by automating sourcing process. Strengthen your relationship with suppliers and maintaining transparent communication with supplier management tools. Make informed decisions with historic and real-time data with spend management tools. All these features will make your procurement process easier, faster, and more efficient. Save money, save time, streamline workflows, increase oversight. Subscribe to Procure Here now and claim a matching grant of up to RM5,000. What are you waiting for? Jom Digital.
Ladies and gentlemen, a very good evening to you. Welcome to today's webinar, Impact of Technology on Business Sustainability, a Supply Chain Perspective. This webinar is organized by Star Media Group in partnership with Brief Asia. Nowadays, there are so many free webinars out there that I believe by now many of us are suffering from this term called webinar fatigue. But you, on the other hand, still choose to take your time out to join us for today's webinar, and we are extremely happy to have you here with us. I can assure you one thing, that you will bring home valuable insights from today's session. So you're here because you have a burning desire to understand how SME can keep up with the ever-changing business landscape and better prepare themselves from a supply chain perspective. In today's webinar, you'll learn more about industry insights, risk management, and supply chain best practices backed by a survey done on over 1,000 businesses. So, data is always key, and what better way to learn than to gather insights from over 1,000 businesses like you. So, before we begin, there's a few quick housekeeping methods to take note of. Firstly, please be patient if you face any technical glitch. You could comment in the chat box or private message us if you encounter any of such problems, and we'll try our best to solve the issue as soon as possible. Secondly, if you have any questions, please feel free to post it in the Q&A box. All questions related to the webinar are welcome. Thirdly, at the end of the webinar, there will be a short survey. It will take you less than 3 minutes, so please help us by letting us know in what ways can we do better to serve you. Lastly, and most importantly, please engage, learn, and enjoy. So without further ado, let me introduce you to our speaker of the session. Shah Muhammad Ali is the Director of Product and Innovation of Brief Asia. Shah is currently heading Transformation and Innovation Initiative at Brief Asia, where he is predominantly working towards SME digital transformation development. He is also an industry fellow at University Utara, Malaysia, providing insights and advisory towards the National Affordable Housing Development Agenda, putting him at the intersection of science, tech, business, and positive impact. Shah's vision is that deep tech entrepreneurs can change the world. Shah, the floor is all yours.
Hello, good evening. Thank you, Susan, for your kind introduction. And I would like to welcome everyone today and joining me this evening on a Wednesday evening, where I would be sharing some insights on concerning matters like sustainability. Let me share my screen. Okay. The topic for today is impact of, just 1 minute, let me reshare it. Okay. Good. All right. Sorry, technical glitch there. Okay, the topic that I'll be discussing today concerns us greatly because it relates to sustainability, and that has profound impact on our lives, both as producers and consumers, right? So I will be talking for about 30 to 40 minutes. I'll keep my presentation short so I can take a lot of questions from the audience today. The flow of my presentation would be like, I'll start off by sharing some insights that we've gathered from the survey. It's actually an annual survey that we conduct each year. But this time around, we wanted to show to 2020 survey as well, just to actually contrast what happened in 2019 and what is currently happening now. Followed by a discussion where we'll be drawing some conclusions as to what the data has to say. And from there, I will be suggesting a way forward as to how we are going to better our business operations and to achieve optimal level of efficiency. So without further ado, in 2004, there was an article published in Harvard Business Review, which was authored by Professor Lee of Stanford University. And in that article, he argued that in the pursuit of actually achieving high levels of efficiency, would be producing more, producing better, and at a lower cost. That inherently made ways towards fragility in supply chains. And he actually went on and said that our supply chains are becoming fragile as we move along, and at some point they are going to break. That's what he said, right? And rightly so. Let's take example of Apple, for example. Their complete reliance on manufacturing is towards Foxconn. And now with the US-China trade war that is coming along, Foxconn has to actually move their manufacturing facilities from China to India, right? What does that mean? That means that there will be delays in iPhone 12, right? We won't get our iPhone 12s on time, right? So what I'm trying to say, the reliancy on tier one supplier has tremendously increased, and that has led to profound impact on the supply chain, making them more and more fragile. So Dr. Lee spoke in 2004. 16 years later, this is what we are looking at. It's all over the news. Sony Electronics supply chain faces instability. Supply chain is crucial for recovery from COVID-19 impact. Coronavirus is a wake-up call for all supply chain management. Now, it's all over the news. And in this pandemic situation that we are in, right, we don't realize one thing, and because there's a lot of panic that is going on, we don't realize that there is a vaccine that is going to come anytime soon. So there have been reports out that state that there'll be a vaccine out in the next 3 months. Some say there'll be a vaccine out in the next 6 months, but there will be a vaccine out. And then this pandemic will be over. But what will we be left with, right? The question that we need to ask ourselves, when this pandemic is over, are we going to go back to being efficient and fragile? Or are we going to build resiliency around our supply chain and not only be efficient, but be resilient at the same time? I think our answer would be the latter one. Now, let's look at the survey and see what the data has to say. Now, our sample size for the data was about 1,000 small and medium-sized enterprises, and we also had 30 large corporations, which was predominantly GLCs and SMEs. So overall overarching challenge that both SMEs and enterprises were facing in 2019 was lack of visibility and streamlining processes. Lack of visibility is basically operational activity between different business units. Now, this is very common among large organizations when they have multitude of business units and multiple subsidiaries. An example that was given to us was that there is a supplier that is supplying to 2 different business units, but the prices that were quoted to 2 business units were different. One could argue that if the delivery is to 2 different places, that could incur some logistical costs. But what if it's a centralized warehouse? Now that that would pose questions at the end of the day when finance has to consolidate everything, right? And this is directly related to streamlining of processes. Because of non-streamlined processes, there was lack of visibility. Now, come 2020, it was all about business continuity and business sustainability. Now, if we see the intensity of what is happening in 2020 is significantly high. It's gone up to 80%, meaning to say almost everyone is concerned about business continuity and sustainability. Now let's look at areas of concern. In 2019, most of the respondents spoke about increasing efficiency. Like the professor said, it's all about increasing efficiency, right? And efficiency in supply chain relates to cost control, reducing turnaround time, and also risk mitigation and risk management. In 2020, it was a complete change, right? Most of the overarching businesses are actually talking about sourcing as their prime concern. Why? Again, going back to what the professor said, reliance on tier 1 supplier. So if the tier 1 supplier goes down, then there is a breakage in the supply chain, because organizations are like, we let the tier 1 supplier deal with the issues and we don't want to know what's happening in the downstream, right? So that is causing a lot of problem, because in a supply chain we see, okay, the initial one, the originator would be the seller, and then we have buyer, seller, buyer, seller, buyer, seller. At the end, it would be the end consumer, which is the buyer, right? So in the midst, there will be buyer, seller, buyer, seller, buyer, seller. That will be tier 1, tier 2, tier 3, tier 4. So if the reliance is on tier 1 and there is an issue in, let's say, tier 5 level, the end consumer would be impacted as well, right? So that is something that is of concern to a lot of organizations. And of course, risk management and best practice is something that everyone is now talking about. How well do we implement risk measurement tools so that we can have more visibility and actually take action? So that are the areas of concern, overall areas of concern from both SMEs and large organizations alike. Now let's look at the weakest link. In 2019, the weakest link that was identified was cross-business unit collaboration, getting people to work together. That has been an issue for everyone for the last 5 to 6 years, getting people to work together. How do we get different business units, different subsidiaries to work together? And in 2020, it was all about supply chain network. Because of the breakage, everyone's concerned, how do we quickly move from one supplier to another? Because the prime supplier could be based in Indonesia or Vietnam or in China. And that with movement controls in place, how does one manage that? Apple's having the same issue right now. They have to, Foxconn has to move their facilities from China to India. How fast can they do that? That is a concern and one of the weakest link among all the organizations. Now let's look at areas of concern specifically for SMEs in terms of digital adoption. For a very long time, we've been saying that SMEs have this legacy mindset, right? That, they just like the way things are and they don't want to change. Contrary to popular, perception, data speaks otherwise, right? Their prime concern when it comes to digitalization is in 2019, it was access to capital, market access, relevancy of a digital solution, and in turn, digitalization cost. Now, digitalization cost, I'll talk a little bit more about it, but let's see what's happening in 2020. Access to capital went down 65%. Market access went up. Now, for them to access buyers, for organizations to actually buy their products and services is getting hard, right? Relevancy of the digital solution that has been pitched to them has increased. They're really looking at a solution that actually solves a problem. And of course, digitalization costs actually went down. Now, from a digitalization perspective, the value of a solution is directly related to its ability to solve a problem holistically, right? Let's take, I'll give you an example of digitalization. Who were the early adopters of digitalization in the F&B space, right? It was not the large chain restaurants. It was actually small cafes and mama restaurants, right? What inherent value that cashless payments was providing was actually certainly costly, because there is a transactional cost that is involved. But what was the key value proposition? Now, when they are dealing in cash, for example, it exposes restaurants towards security risk because now they have to carry piles of cash and deposit it somewhere at the end of the day. Their problem there was security exposure, right? Security risk exposure. Cashless actually solves that problem. So they were willing to pay for that because it solved the problem. So it actually is not the mindset of SMEs that we should focus on. It's the focus on the relevancy of the solution itself, and it should solve the problem of SMEs, right? I'll talk a little bit more about it because it has to do with the ecosystem that surrounds the entire supply chain. We'll talk about that in coming slides. But let's move on. We know that we are in crisis time, right? But what type of crisis are we facing? What type of turbulency are we facing? In order to understand what turbulency we are currently facing, we need to know what type of turbulency we are not facing, so as to avoid confusion, right? Let me talk about that for a bit. Now let's look at past crises. Asian financial crisis in 1997, subprime mortgage crisis in 2007, European sovereign debt crisis in 2009. They were predominantly finance driven and they were predominantly localized. Asian financial crisis was predominantly Asian. Of course, because of globalization, there was some spillover in the rest of the world, but it was predominantly an Asian affair. Subprime mortgage crisis and European sovereign debt crisis was basically a North American and European affair. Of course, there was spillover, but it was pretty much a North American and European. We were sipping our teh tarik, whilst there was havoc in across continent, right? So how do we identify a finance-driven crisis, right? So if we look at the stock market and GDP, so if we see that there's a dip in GDP, the stock markets would react accordingly, right? So if we see on the graphs there, as we see that the stock markets are rising, we also notice that there's a GDP that is rising as well. And as we see there's a dip in the GDP, we see there's a dip in stock market as well. So that actually reflects that it is a finance-driven crisis. Now, what is happening now? It is reported that we are taking a dip in our GDP, but at the same time, Bursa is saying that their trading is all-time high. How do we reconcile this, right? Logically, if there's a dip in the GDP, there should be a dip in the stock market as well, but it's not, right? GDP is a function of consumption and production, whereby stock market trade is a function of liquidity in the system, right? So meaning to say that it is not a liquidity-driven crisis that we are currently facing. It is predominantly a consumption and production issue. So now that we know that it's not related to liquidity in any way, so there are two things that we are currently facing. One is an intermediate impact, which has to do with decline in consumption. Decline in consumption is because during the MCO period, we were locked in and we were not going out. Hence, we were not buying, right? The other aspect to it is we are not spending. Why? Because of the uncertainty in our minds that what will happen in times to come. Some people are saying, will we be having our jobs? So we need to save for rainy days, right? Hence, we are not spending, but whatever we are saving, we are investing. Hence, the boom in the stock market, right? But what we should be focusing on is the long-term ramification, which is related to disruption in the supply chain. What that has done is actually has declined production due to scarcity of resources. When a factory is closed, they can't actually produce. And that has actually toppled the fragile supply chain that actually existed, right? So if one can't actually find raw material, final goods can't be produced. And this has actually disrupted the entire supply chain planning from an organizational perspective, right? So they have to go back to the drawing board and say, how do we source a certain item, right? Now let's look at how priorities have shifted in a very short span of time. From a supply chain perspective, we're looking at three things. We're looking at sourcing, we're looking at production, we're looking at distribution. Now, in 2019, from a sourcing perspective, what was in everybody's mind? Best quality at the lowest price. Reliance on tier one supplier, and we'll forget everyone else. We buy as we need, right? That was from a sourcing perspective, that was everyone's mind, right? From a production perspective, we maximize our production, we produce lots because there is demand, right? Aim to achieve 100% capability. From a digitalization perspective, it was digitalization of production, right? Automating the production process as opposed to administrative and the others, right? From a distribution perspective, it was where the minute something's produced, the next day it should be in the consumer's hands, right? How fast can we get our products to the consumer? Hence, focus was on coming up with efficient distribution channels. This is where e-commerce was thriving, right? Because quick way, easy way of getting products to the consumers. So the mantra that was being chanted in 2019 was better, faster, cheaper. Come 2020, sourcing. There's scarcity of raw materials, hence sourcing has become difficult. From a production perspective, There's a decline in production, and that actually has created demand volatility in the market. So an example will be when we go for our grocery shoppings, we see empty, shelves. We go back again and we see there's something there. We buy all of it. Why? Because in our minds we're thinking that we may not get it the next day, right? Hence, that has actually caused demand volatility and planning issues for organizations. Now, from the distribution side, again, we were in movement control, so there is difficulty in terms of moving products from one place to another. Now, things are opening up, so we were seeing that movement has become a lot better. But again, cross-border movement is still a struggle for a lot of organizations. So in the midst of all the turbulency, the digital purpose is being redefined, right? In 2019, if you're an MNC operating within the ASEAN region, you're in the phase of planning, right? You have a digital team that is coming up with blueprints, and they are in their discussion, and it's all about planning. If you're an EU-based company, you're thinking more about tightening risk management and bringing in digitalization tools which would help with that. Why? Because they were going through Brexit. And due to policy changes, they had to rework their risk management policies as well. Come 2020, it's not about planning. It's about deploying. It's about how fast things can be implemented, how fast a digital solution will enhance their supply chain network, how fast can they bring about sustainability towards their business operations. And this is where also risk mitigation and risk management strategies are in play as well. Now, what is the way forward here? Of course, we need to be competitive. Hence, moving towards achieving high levels of efficiency will not change. Moving towards price competitiveness will not change. But we also need to address the elephant in the room, which is the supply chain fragility, right? That is something that we need to address, because if God forbid, if something happens a couple of years down the line, will we be able to withstand a next crisis, right? So prudent measures need to be made. How? How do we address fragility? Now, bringing back the mantra that was being chanted, that is being currently chanted, is predictability, redundancy, reliability. What is predictability? Predictability is basically knowing failure is going to happen, right? And also knowing when it's going to happen, so we can actually make plans to actually reduce the impact of that failure, and also to actually have no impact whatsoever if things are planned well. So knowing when something's going to happen, how it's going to happen, is basically predictability, right? It's actually identifying the structural weakness in the supply chain. Redundancy is, now we know that there's going to be failure down the line. How do we plan for it? Redundancy is actually identifying. First, we've done the identification. Now it's all about planning. What will be the contingency measures that we need to put into place so to avoid the impact of crises or failures? Reliability is whatever is planned out, does that actually work, right? So it's making sure things are in place and they are actually working. Let me put this into perspective now. From an operational perspective, right? Now, from a predictability standpoint, right now the issue is that organizations do not have oversight of their downstream. Their reliance has been on tier 1 supplier alone, and there's no oversight there. So there needs to be an integrated platform, which is part of, brings each stakeholder in place and forms an ecosystem so that everyone has an oversight of what's going to happen. Let's say if there is a break in any leg of the supply chain, that could be identified, and measures could be put into place to mitigate the risk, right? So with data analytics, one can actually monitor demand cycle lags. How does the demand of a certain commodity going to impact the business in terms of production, in terms of this, distribution, and also basically manufacturing, right? Now, monitoring consumer behavior. That is really, really important, because consumer behavior is actually very speculative. Someone comes out and says, there will be lack of masks. Next thing you know, everyone goes and buys masks, right? So how do we curb that? And it actually happened in North America. People just kept buying masks and sanitizers, and there were none to be found there. They actually started selling them on eBay at an exuberantly high price. So that was how do we actually curb consumer demand? And then also identifying where the supply chain breakage is. That is very important. For whatever cause, rhyme or reason, that there's a breakage, that needs to be known way ahead so risk measurements can be taken. And all this can be achieved through data analytics, and in particular, real-time data. Now, moving on to redundancy. So when you have data that is consolidated in place and it's real time, optimistic scenarios and conservative scenarios can be made, right? But in order to do that, now things cannot be done in silo. It has to be a collaborative effort. So there needs to be collaboration between organization and technology solution providers. But one needs to make sure that a certain solution that is going to be deployed is viable. It is easy to implement. You don't want something that is difficult to implement and then you're just stuck with it, hoping that you never really ventured into that path. It has a short learning curve. Technology is supposed to make our lives easier, not difficult. And of course, it needs to be cost efficient. From there, it moves on to reliability. This is where real-time collaboration between all the stakeholders in the supply chain could collaborate and share data. Because we are living in the shared economy, I understand the concerns about data sharing, but there are measures that are there whereby certain sensitive data can be kept secret, right? Of course, with increased visibility, how we act upon mitigating risk can be done easily, and how we put compliancy and contract tracking measures in place can be done easily as well. Let me come back to SMEs, because they are very close to our hearts, right? And they are cornerstone of our economy. Now, SMEs, when they say we've got a problem, we need to listen to them. What is their problem exactly, right? SMEs, the time that it takes for them to actually sync up with a buyer, and if we translate that into cost, it's quite high. Their cost of financing is pretty high, and I'm actually going to talk about that in a bit. They have lower access to competitive rates from other suppliers because the other suppliers are actually in the same boat as the SMEs as well, because they are SMEs too. They are actually competing with bulk manufacturers from across the border, from Indonesia, from Vietnam, from China. So they really need to lower their prices even further to actually compete, because bulk manufacturers can produce more, and while producing more, they can lower their costs. Hence, SMEs are working with really, really low margins. So when we talk about relevancy, they're looking at a solution which actually addresses that problem. Because a solution could be free. but the adoption rate would still be low. Why? Because it doesn't really address their issue, right? Because even if it's free, it will be time value of money that kicks in. I'd rather do something else than to spend time using this system which doesn't really help me out, right? So that is their concern. And it also has to do with supply chain ecosystem. We think at present, the ecosystem is supplier, buyer, supplier, but it is inherently fragile and fragmented. Why? Because there is one stakeholder that is sitting in the corner and which has a profound impact on what's going on, which is the financial institution. Financial institutions, for every, there are obligations that suppliers or SMEs or any business has to pay their loans at the end of the day, right? For whatever reason, if they are unable to fulfill their obligation and financial institutions pull the plug, that creates an issue in the entire supply chain as well, right? So when an SME applies for financing, the credit risk is on the burden of that that SME. They are carrying the credit risk of the entire supply chain, right? Rather than having a spread. So what it does is that SMEs are rated as higher risk. When there is a higher risk, the cost of financing goes up. And also the cost of evaluation and transactional cost is there too. So all that cost is then transferred to the SME. So their financing cost goes up, right? That's a cost going up. So what we need to do is to reimagine a supply chain whereby there is a credit risk spread. What kind of supply chain, what kind of ecosystem would that be? That ecosystem would be resilient and interconnected, meaning to say the financial institutions would have an overview of the entire supply chain. So when they are actually evaluating an SME, there would be a credit risk spread. And when there is a credit risk spread, SMEs would be considered as less risky. Hence, the cost of financing will go down. When the cost of financing goes down, that is then passed on to the SME itself. So that is one way of reducing the cost of financing for SMEs, and also creating resiliency in the ecosystem, having, an overarching view of what's happening. It not only reduces the cost of financing, it increases the visibility of the supply chain, increases the resiliency of the supply chain, right? Now, I'll end my presentation by going back to what Professor Lee said in 2004. Are we going to be just focused on efficiency and lowering costs? Or we are also going to look at strengthening and giving our supply chains more resilience. So if something happens down the lane, they don't get knocked, they don't just fall apart. And how that is going to be done is through end-to-end digital process, keeping three things in mind: predictability, redundancy, and reliability. That would provide an overall sustainability in the supply chain and overall ecosystem. With this, I thank you all, and I'll take any of your questions. Okay. Yeah, so there are a couple of questions here. On the video, there was a mention of a grant for digitalization. Could you elaborate on that? Good question. Yes. Given the turbulency we are in, government has actually provided some stimulus for SMEs. And there are a couple of government agencies that are involved in dispersing that. In particular, there's one which is related to SMEs in particular, which is being championed by MDEC at the moment, and in partnership with BSN. So this is a matching grant of 50%, and Provasia happened to be a endorsed solution provider, meaning to say if anyone who uses Procure here, our e-procurement solution, would then be able to apply for, would be eligible for a 50% grant. Next question. Are you a local boy playing against major MNC players? How does your solution help with market access? Good question. Yes, we are a local boy playing in that space, and we're very proud of it. There has to be a Malaysian company that actually takes on the big boys, right? Now, from a market access perspective, what happens is that it is an interconnected, we're creating an ecosystem which interconnects buyers and suppliers in a different manner. So in order to do that, we need to understand what do buyers need and what do suppliers and vendors need. Suppliers need ease of contracting and also getting products at the lowest price possible with minimum amount of rejection. For vendors, it's all about getting access to those buyers and also being able to fulfill the contracts that have been issued to them. So what we have is a pool of buyers on our system because we are a SaaS-based system, and we have a pool of suppliers as well. What it does, so at present, we have about 16,000 SMEs registered, having access to large buyers with a transactional volume of about 6 billion on average. So that is how we are actually addressing the market access issue. Any more questions? Right, there's one more. The concept of predictability, redundancy, and reliability is intriguing as the way forward. Does that mean everyone in the supply chain will be on the same platform? Very good question. We are moving towards democratization, and we are in the era of platform. If we go back and see the impact that platforms have made, such as Alibaba, for example, the connectivity of connecting one business to another, and then it spreads out, and then creating an ecosystem around there. So to answer the question, it should be in one platform, or if it is, now we are in the era of collaboration. So through collaboration, different stakeholders could be plugged into platform, right? So it doesn't necessarily have to be a platform owned by one entity. It could be a consortium as well, right? So it doesn't necessarily need to be one platform owned by one entity. It actually can be a consortium, and where different players bring in different skill sets into play. Okay, could you please give an example of how resilient and in connection of financial institution with both suppliers and buyers? Understood. So, great question. In an interconnected platform, what happens is that, let's say a buyer contracts a supplier, and in a contract it states that, say the supplier has to supply 10 tons of cement on a weekly basis, right? The supplier is able to supply for week 1, week 2. In week 3, they run out of capital. So what do? They have to apply for financing. And when they apply for financing, number one, financial institutions have to do their due diligence and verification. And that verification process generally takes quite a bit of time. So the aim is actually reducing the verification time so that within that week, the supplier can actually fulfill their KPI, right? Through a platform and providing visibility to the financial institution, what happens is that they can verify a certain PO is genuine, a certain invoice is genuine, a certain contract is genuine, who is the buyer, are they able to pay or not, right? So that verification becomes a lot easier. Hence, the evaluation time reduces significantly, right? So this is actually one of the interconnective advantages of interconnectivity within a platform. Any more questions? All right. I think your point about cost of finance makes a lot of sense. Could every party in the entire supply chain probably pays a bank some interest, and the sum total of interest that accumulates into a single product must be quite significant. It would be great if banks can finance an entire supply chain, thus lowering the cost. All banks be prepared to do this, or will the fintech players come in and do it? Very good question. Now, this is something that a lot of fintech are actually raising the banner and saying they are disrupting and trying to do what financial institutions are unable to. But we believe that we are in a more collaborative rather than competitive mode, especially in this crisis time. People need to work hand in hand rather than silo. So there are strengths of fintech and there are strengths of financial institutions. Financial institutions have users, financial institutions have capital. Fintech has technology, they don't have users, nor do they have capital. So there has to be a synergy between the fintech players and also financial institutions, because financial institutions can actually open doors towards users, and fintech solutions can provide them with technology and the robustness of how they work and how they deploy. Whereas financial institutions are answerable to boards which are very short-term gain conscious, right? So there has to be a synergy between the fintech players and also financial institutions for ecosystem to be resilient. How do we resolve the issue of the bank still evaluate the firm based on its own merit and not the overall risk of the industry? Try asking the SMEs, is it genuinely difficult to secure a loan from a financial institution? Yes, it is. Because, I mean, we've been collecting data and we've got 1,000 SMEs to say it is. They are considered as a high risk proposition for banks, right? Again, if there is a mechanism whereby there could be a credit risk spread, that will inherently reduce the cost of financing for SMEs. I believe instead of telling SMEs to change their mindsets and to actually tell them that's how they are, let's just lower the price of our product. Instead of doing that, let's just listen to them and see what their trials and tribulations are and to address them accordingly. And we believe that through democratization and having platform which is a consortium rather than just owned by one entity would be the way forward. Any more questions? If none, I thank you all for joining me, and I really appreciate the questions that were asked. Thank you very much. If there are any further questions, do reach out to me and us via LinkedIn or via our website. We'll be happy to have more chat and to have further discussion. Thank you very much. Over to the Star Media team.
Thank you so much, Shah, for such an insightful session and taking in as many questions as you can until the end. All right, ladies and gentlemen, we are almost coming to an end, and we hope you have enjoyed and benefited from this session. There's always something to learn irregardless of who we are, where we are, and what we do. So thank you once again, Shah, for sharing your knowledge, and Prefacia for making this happen tonight. We have one final request from you, and that is to let us know what you feel about this session by completing the feedback survey that will pop up right now. Ladies and gentlemen, on behalf of Star Media Group, we would like to thank each one of you for being here with us throughout the session. We will stay on in this session for the next 10 minutes or so before we leave. Once again, thank you, and we hope to host you again in our next Star Media Group event. Stay safe and have a good night rest.
Are you a small and medium-sized enterprises and looking to grow your business? Save cost while rising above the competition? Did you know that digitalizing procurement process enables smarter purchasing decisions? By spending less or demanding better value, improving your cash flow, boosting your profits, and giving your business the extra resources needed for future investments for expansion. Introducing Procure Here, your one-stop source to pay. E-procurement solution which enables you to realize cost savings via a fully trackable purchasing process by automating sourcing process. Strengthen your relationship with suppliers and maintaining transparent communication with supplier management tools. Make informed decisions with historic and real-time data with spend management tools. All these features will make your procurement process easier, faster, and more efficient. Save money, save time, streamline workflows, increase oversight. Subscribe to Procure Here now and claim a matching grant of up to RM 5,000. What are you waiting for? Jom Digital.